Okay, on December 15th, when we did the December 15th payroll, we pulled out $494 for employee income tax for all of our employees. Okay? That would have been that number right there. Oh, does it match? $494. There you go. Right? $494. And then on the 31st, we did another payroll, and we pulled out $504. Okay, those are, we just recorded them. Okay, that's all we did right here, is we recorded them. We haven't paid them yet. Now we're ready to pay them. Okay, so December's over, so now we have to pay this on January 15th. Okay, so now on January 15th, we owe $998. We're going to debit it, because when we debit this account, what'll happen to it? It'll become, what's the total, the balance? 0. Okay, because we paid it all off, right? Okay, so this is what we're doing right now, is we're debiting the $998, because we credited when we actually did the payrolls. Okay? Everybody following me? Still a little fuzzy? Okay, now this is where it's going to get fuzzier. Social Security tax payable. On December 15th, we have two numbers, 500.76, 500.76. Why would I have that in there twice? Remember, this is our T, right? So it's crediting, it's keep putting it in there, we're recording it, we're putting it in there. Any thoughts on why we see the same number 2 times on the same date? That's right. This is where the EE and the ER comes in. The business has got to pay that amount, and the employees paid that amount, okay? So one of these is the EE, one of these is the ER for the December 15th payroll. Okay, one of these came from this journal transaction. One of them came from this journal transaction. Okay. All right, so then also we made a payroll on the December 31st. Same thing. Same number in there twice, because one of them is the EE and one of them is the ER. Okay, so do you see that when we did this journal transaction and we journalized it and we put it in the ledger or posted it into the ledger, that number keeps increasing that account, right? And then when we did this one and posted it, it increased that account. Now we've got to pay it, so now we're going to decrease it and zero it out. Okay? All right, so there's the total. We'll debit it to pay it, and that account will end up at 0 again. Okay? So Medicare is the same way. Those are the two that we double, okay, or we match. So one of these is an ER, one of them is an EE, EE, and ER. Okay, and if you need to make a note over here what that means. Okay, EE equals that it came from the employee's paycheck, and ER means it came from the employer. Okay, and then of course now we just got to pay it. So we debit it, all of these, and then there's our transaction with the cash credit. Okay, and that's what this transaction looks like. Employee income tax payable. There's our $998 right there, and then $202,306. That's all of the December's employee and employer side added together. Okay, Medicare tax payable, same thing. Employee and employer side added together for both paychecks to pay that bill. And then there's the total cash credit. Okay? So did you see how we recorded it in the first one? We recorded it in the second one, and now we're paying it. Okay. Even though we paid something on the first one, we weren't paying these, right? We were just paying the employees their check. Okay? All right, so let's look at our 13.4 working together and go ahead and look at the transaction. Okay, so this one's kind of changing. It's a monthly pay period ending March 31st. Okay, so the pay date's March 31st. We're just getting paid once a month for this little example. All right, the federal income tax was withheld here. Notice I circled the EE. Okay, so if this is just the EE, the employees portion, what am I going to do to that number to actually write this check? Double it. You add it twice. Double it. Okay? So it's important, and that's why I keep saying EE and ER, because it's important to read and make sure you know what number they're giving you, because sometimes they could give you the whole thing. Okay? They're not real consistent about that. And then employee, again, what am I going to do with that number? Double it. Okay? If they paid, if we pulled all this out on March 31st paycheck, when is it due? When do I have to write the check by? April 15th.
Would you write it, do you add it up and then write one, or do you just write that amount twice? For the Social Security tax?
For these?
Yeah.
When we record it, we're going to go ahead and double it. Once.
Okay.
We're just paying it once, yeah. Okay? And, yeah. So actually, let's go ahead and put the note at the top about the monthly scheduled depositor. Because you remember that because I said it, but let's go ahead and write it down. So a monthly schedule depositor and again, the IRS has rules as to whether you're a monthly or a quarterly depositor. You pay by the 15th of the next month. So like this example, March 31st is the pay date, so we have to pay this by the 15th of April. Okay? And this is for employee income tax, Social Security, and Medicare. Now the other two that we're going to look at in a little bit are FUTA and SUTA. We're going to have to pay those two. So FUTA and SUTA, we're going to track and keep track of for 3 months, which is a quarter, and then pay it. Okay? So we're going to pay at the end of the next month after the quarter ends. Okay, and we'll take a look at that and think about that when we get ready to write that check in here in just a second. Okay? All right, so let's go ahead and jump back to the March 31st payroll. And we said that if the 31st was the pay date, then April 15th is when we have to pay this. Okay? And we have to pay those 3 things that you see in your book. Federal income tax, which is employee, the actual account name is employee income tax payable. It does tell us that we are working with check 495, and we're on page 14 of the journal. We'll make sure we get those 2 things in there too. Page 14, check 495, employee income tax payable. It's just the number they're giving us right there, 1320. Okay, and then the next thing is Social Security tax payable. So Social Security tax payable. Okay, and again, like y'all said earlier, we got to double that. So 1331.76 times 2 will give us the employee plus the employer match. Okay, so that'll be 2663. 52. Okay, and you might want to put a note out there. This is employee plus employer. And then Medicare tax payable. Again, employee plus employer. So we take what they tell us is the employee side, basically double it because they're matching it. So 311.46 times 2 gives us 622.92. Okay, and these are all the things that we owe. That's what we're going to pay. So all of those added together is our cash credit. And I think it, no, it doesn't give it to us in the book. 460644. Okay, any questions on those numbers? You following? Making sense? Making connections? Still a little fuzzy. Okay. All right, then it also tells us to pay the FUTA and the SUTA. So it says that the credit balances, okay, so if it says a credit balance, you know that it's on the payable side. That's the normal balance for payable. It's waiting to be paid. For federal, it's 515.52. For state, 1159.92. It tells us that we're writing 2 checks. Okay, it's going to 2 different places. One goes to the federal government, one goes to the state government. But it's pretty much straightforward, just a check. Okay? And the due date. Okay, so this is so March 31st, January, February, March. That's the end of the quarter, right? So when do I pay FUTA and SUTA? We just wrote it down. April, end of the month, 30th, April 30th. Okay? So on April 30th, we're going to do FUTA payable, and it tells us that that number is 515.52. It tells us the check is number 522. And like I said, it's just a check. So we'll come over here and do our cash credit. Okay, and then also on the 30th, SUTA, paying the state, payable, check 523. It gives us the amount 1159.92. Got it all? Okay, so those are the only transactions for this chapter. Like I said, there's not a ton of them, but you're using the same accounts, so you just gotta, it's hard to just kind of memorize a pattern with this because all the accounts are the same. You just kind of really have a better understanding of the why. So I tried to create the notes page so that you can use that as a why. Hopefully you added some other things if you needed to help you understand the why. Okay, to see where all the numbers are coming from.